Today we're going to be talking about a new stock on the channel, ticker symbol PATH, Path. Now, when we go into this company, it's important to understand that this is one of the, I think, down the line sectors, down the line stocks. However, I need to start mentioning it because I think it's a great opportunity as far as a stock play specifically. And NVIDIA has said this specific sector will be the biggest opportunity after AI. So again, worth mentioning, worth talking about. There was also major news about this as well from the White House. So we have a lot to unpack here on the day. Now, before we go in too far, I do want to say a few things. If you like the channel at all, I appreciate you hitting the subscribe button. It helps out a lot. I think like 40 to 50% of the people who watch the channel aren't even subscribed. If you also want to get more content from what we're doing every single day, throughout the day, the Twitter link is down below. I'm posting there all day long, all my stocks, charts, different setups I'm looking at. You'll usually get the stuff there first before it's even here on YouTube. And then of course, if you want to see what we're trading, how we're trading, the Discord link is down below for everything in detail of what we're looking at. And again, we're entering swings, things like that. And one of the swings we entered today was CrowdStrike swings, which already are up like 30%. So that was awesome, but it's all there for you. The Discord link is there. Do what you got to do. Let's get to work. Now, again, what we're going to be looking at is ticker symbol PATH, UI, Path. And let's break down what they do first. I always want to do this first so people know, and then we'll dive into the chart where they're at, because I do think it's an opportunity. When you zoom out on the daily, I do want to just give you an idea of where we're at. So if you're just not interested, you can just dip out of here. But Path has really based down here near $14 to $10. And the great thing about this isn't like a penny stock or anything like that. It's a legitimate company that is profitable and doing pretty well, and they've been profitable for a while now. But again, they're kind of just basing down here with consistent earnings around the $400 million mark. And so that's where we're going to really dive into. So the first thing, let's talk about what they're doing. So a breakdown of what the company does, core business, etc. Right? So agentic automation platform. Okay, I want to go down to the bottom first. Primarily operates as a SaaS company, generating the majority of the revenue through high margin, predictable subscription services that focus on recurring revenue from large enterprise customers. And basically they're doing the back end software for anything to do basically with robotics. They have various deals even with companies like AWS, so worth mentioning as well. So again, the robotic process automation, RPA, this is the core technology, what they do. The software robots can perform a repetitive or rules-based task in an organization, like opening emails, extracting data from documents, logging into applications, filling out forms, moving files with speed and zero errors. Now, the process and mining and task mining, this part of the platform uses AI automatically to analyze how work gets done and a company to discover which processes are best candidates for automation, identify bottlenecks and opportunities for efficiency. Then they have obviously their AI large language models, what's happening there as well, and machine learning. So again, they're really going into basically, when you think about the company, I like to use it as an example of, let's say you have a factory full of Amazon robots down the line, right? And this is what's deciphering and organizing the entire process of their fleet for shipping, right? Which is obviously a big deal. Now, what they will be doing, and specifically what they do, is they're the software that organizes all of that, and they're outsourced from AWS to Path to get that software aligned and make sure everything's running smoothly. And that's kind of how they step in there. So that's like the easiest way I can explain this. And they work in different models in different ways. That's just the simplest, okay? Basically, the pros for the businesses and what it means for them when they use Path: increased efficiency. Obviously, these robots are able to work 24/7, 365, unless they're getting fixed or anything like that. Reduced costs by automating tasks. Companies can reduce the reliance on human labor, improved accuracy, free up employees to do more tedious work and more critical decision-making work. So that's very important to think about as well. So you're cutting costs across the board. And so when you see companies like Amazon or Microsoft or Meta and these companies that are mass laying people off, it's probably because either number one, AI is being used, or number two, robotic AIs are starting to be used as well. And that's where Path really comes in. Now, when we look at Path as a company, let's talk about what they're doing and where they're at. So when we look at overall revenue, I want this to be kind of clear. This isn't the best part of the company. So if I just look at revenue, they've been pretty flat from 2023 to like 2025. Really nothing has changed here at all. Transparently clear, nothing has really shifted. When you go over the quarterly earnings as well, very consistent. Like I said, 350 to 400 million is where they're kind of sitting at. This is 2024 of January. So you can just see for the past 8 quarters, basically just hovering back and forth. Now, this is why I said that I don't think this is a short-term play at all. And they had earnings today as well, which were pretty solid, right? Which they came out pretty decent. But I think it's really important that we understand that again, this is a down the line type of play. And I see people pushing this as like short term, this and that. And I just don't believe that that's it at all, right? And the other side of this is I don't think it's like in a situation like, let's say, even Nebius, right? So Nebius, they were a crypto mining company, then they plummeted and died. They kind of sat down here and then they became a data center company, and they were revived, and they're doing really well and on a good path. I don't think it's this story either, to where they kind of just like fell off and are doing bad, right? I think this is just more of a case of this business hasn't exploded yet. When it does, the companies that are going to really thrive in robotics are going to be the companies that have a known brand, a known name, and have built good relations. And of all those, I think Path is doing them all. It's a very similar thing to something like PLTR, right? And again, I see people compare the businesses. I don't think they're comparable completely, but worth mentioning. Like PLTR wasn't a bad company down here. It's just we weren't at that point with AI and automation yet. And then when it happened, and the growth was rapid and it was fast. But again, Path isn't taking on debt. Path isn't extremely overvalued right now. That's what you're really looking at right now when we see where we're at and how we're operating. So buying into this range as a stock for me just makes logical sense. But again, it's one of those names I'm just going to have to sit on. So I want to keep making that clear. Okay. So again, when we go into a deeper dive of the revenue, though, this is very important to look at as well. So we're going to go back to 2020. This is just every year. And so we have the red represents total revenue. The blue represents cash and any equities they may own. And then obviously, the orange represents total debt. Now, overall debt is pretty solid, right? Debt from last year into next year projected to be around the same, revenue slightly up, and also cash slightly down. So cash has been pretty heavy as well, being held up around 743 million in cash. That's fine. Doesn't look bad. Pretty happy with all that, right? So as a company, they seem healthy. Now, earnings beat today as well. And this is where things get more interesting. And this is why I think, again, this is where the opportunity lies in. And I kind of haven't mentioned them yet because I just don't think it's a rush to mention them. But it's funny today you're seeing Tesla stock get a lot of love because Trump went in with his administration and basically said, look, we're looking into robotics. We're going to start pushing this out. The administration is considering issuing an executive order on robotics next year to basically accelerate the overall growth, right? And that's what they want to do. Commerce Secretary Howard Lutnick has been meeting with the robotics industry and is all in on accelerating the sector's growth. So again, you're seeing this going to go broad. It's not just going to be one company, anything like that. And again, it's important to think about this in this way. You're going to have companies like Tesla that make robots. You're going to have companies, I don't know all the robotics companies out there, right? Let's say XPEF is another one that's going to make robots in China, right? But they're all going to want to have these tools on the back end and the software companies in the back end. And that's, again, where I think Path is the use case. Because, again, like the gold rush we talked about with NVIDIA, there's going to be another wave into robotics. And I think that is like the next and final wave there. And NVIDIA is going to make a killing off that. But I think what you want to be interested in is who's going to sell the tools to these to the gold rush. I think Path is one of those big tools. NVIDIA is going to be one of those tools, obviously. But again, worth mentioning, worth watching. And then going into their earnings, this is where you're starting to see things get more and more realistic and of how the growth could be kind of turning around. So sales and marketing, they're actually lowering how much they're spending overall on sales and marketing, as you can see here, quarter over quarter, which is really nice to see. But despite that happening, spending less on marketing, guess what? Their sales and revenue are up. That is a very, very, very good sign, right? So not having to do as much on that end. The other part is what was said from the earnings call as well. I'm pleased with our third quarter results, delivering an annual recurring revenue of 1.78 billion, up 11% year over year, which again, annual recurring revenue is going to be major, was a very big thing with PLTR, especially from the government contracts that they had. A testament to our team's focus, consistent execution, and the momentum we're seeing as customers scale agentic automation across the enterprise, said their UiPath founder. Enterprises are accelerating their AI and automation strategies, and they're looking for a unified platform rather than standalone tools. Our ability to bring them deterministic automation, agentic automation, and orchestration together in one trusted governance system is a true differentiator and is delivering meaningful outcomes for customers and positions us well as we close out the year. I can't believe I pronounced some of that right. But again, worth mentioning where we're at. So again, they're in a very good place for continued and sustained growth. Now, again, what you're really waiting for here, if you're owning Path, is you're waiting for the surge. You're waiting for the news. You're waiting for something to change. Now, yesterday I did a video on Robinhood, and usually I recommend watching that video, to be totally honest. Where's it at? Down here. So now Robinhood, and I think this is a good example where Robinhood got interesting. If you go look at that chart, and again, I'm not saying they're the same company, I'm just using the chart as an example. You know, this happens where you sit down, very similar looking chart, right? If you look down at Robinhood, you kind of flatlined here. And in the first quarter of 2024, everything really changed. Well, what changed? It was all based off that revenue that you started to see come in, and specifically with crypto. And if you go look at this, like you're basically pretty flat on total crypto revenue. And then in December or beginning of 2024, you spike and you spike again. And since that's happened, Robinhood has gone crazy. You can even go back down here to see exact quarters of where this happened and average revenue per customer, which also surged in that year as well. From again, December 2023 to 2024, and then obviously into 2025. And that's the big jump that you saw. And what they did is, again, that crypto revenue started spiking because they took crypto more seriously. And so when they started seeing a J curve and started seeing a big surge of demand, that's when the company started breaking out. And again, they've just continued to take advantage of that. That's the same thing that I'm looking at with Path, right? I'm not saying this, I'm looking for this to go to $100. I'm not looking at that. I'm just saying, and the reality is once you start seeing companies and bigger companies start to step in, start making bigger bets, bigger orders, you're going to see Path start to surge. The great thing is costs are low, they're profitable, lots of cash on hand, and they're positioning themselves well for the future. And again, I think if you're big on AI at all, I think everyone knows it's a matter of time until robotics start to really step up. I think that's going to be the next wave. Jensen, the CEO of NVIDIA, also agrees with that as well. So I think it's very important that we understand what and why we're looking for this. And if you go to NVIDIA's last big investor meeting they had, where they announced all those big investments that they made into like 30 different companies, one of the biggest things they talked about were robotics. And again, their chips are going to be dominate for that. But it's important to understand where the money is like dumping, like where these big successful companies are dumping their money. I would be watching where they're dumping their money and then trying to take advantage of those opportunities inside the market. So again, I'm not saying you're gonna get rich or this is anything like that. You need to do your own research as always. But I like Path. It's in a really interesting spot. And again, as long as if it's down here like $12 to $15 for me, I'm probably gonna be buying some stock is the way. And again, I wouldn't be surprised if going into 2026 we start seeing a surge here and this could start really moving nice. Follow for more content. Let me know what you think. All the links are down below.